Hi there, Suren here again. This time we've got, still sticking with property, we've got a very interesting session ahead. I'm chatting to Rupert Finnemore, who's the CEO of EasyProperties. And EasyProperties is part of the bigger Purple Group, but also Equities. And those two companies have disrupted the market. EasyProperties is quite new to their business, only about 2 years old. But we're chatting to Rupert today just about what is EasyProperties doing that's disrupting the market. And we're chatting to him also about access, because the company is leveling the playing field somewhat to allow almost anyone to get into the property sector. I know this because I've already done a story, but welcome, Rupert, and
thank you very much.
Looking forward to the chat.
Yeah, me too.
As I said, the history with Purple Group being the holding company or the listed side of things, but EasyProperty is somewhat new. It's 2 years in the game, but it also came in during COVID. Tell us. It's a property play, not really rather a prop tech play. A little bit of history of how it came about.
Yeah, thank you. So obviously Equities was launched about 7 years ago, and it was around about 2.5 years ago, a survey was done with the Equities community, which at that stage numbered quite a few 100,000, about what other assets the community would like to invest in. And overwhelmingly, the majority of responses that came back was property. I think initially it was a little bit surprising, with the state of the kind of property market and everything that was happening. But I think if one applies the kind of political and psychological history and attachment to property, it shouldn't have come as a surprise. But yeah, based on that, the idea of EasyProperties was born.
And what makes it easy?
A lot of hard work makes it easy. I think there are a lot of friction points when it comes to traditional investing in property. And so what we've done is we've attended to those friction points and solved for a lot of those friction points. Things like a very simple one is an access to capital. If you don't have access to capital, it's very difficult to invest in property. The other friction points are things like lack of access to finance, lack of access to opportunity. On the assumption that you are able to solve those three things yourself, you still got to then go and find a quality opportunity. You've got to be able to manage this property yourself, and you've got the risk of not necessarily being able to diversify that property investment. And so I think through solving all of those things, it has become certainly easier. I think that's probably it.
And maybe a little bit of insight behind the model that EasyProperty offers for investors to get into the property industry.
Yeah. So we've got a group or a big team of people that actually are out there sourcing quality investment opportunities. Generally, if you're a retail investor or someone who's looking to buy a residential property, you're out there paying retail prices. What we're able to do with our community, we're essentially crowdfunding a checkbook. And with that size and weight of the checkbook, we're able to negotiate particularly good deals for our guys. So that's the first starting point, is going out, finding good opportunities, understanding the market, negotiating these kind of discounts which gets passed on to our investor base. We then package that all together. We sign an offer to purchase with the property owners, subject to raising the finance on our platform. We package a whole big prospectus. We put financial models together, the whole bang shoot. We get that all approved by the CIPC, and then it's up to our community to decide whether they want to invest in that property or not. There's a funding target in place. We raise generally 70% equity. We've got a 30% loan to value. We've got an arrangement with SA Home Loans who finance our properties. And should we meet the funding target, then we take transfer of the property on behalf of in the SPV that people are buying shares in that will own that particular property. And then we've got a team that manage those units in a particular property opportunity, delivering returns, collecting rent, managing the vacancies, all of that. So that's essentially how the model works.
And the access part beyond the side, the friction points that you talked about, where it's access to capital and that sort of thing. What I found quite interesting is that you can invest anything from a rand to hundreds of thousands of rands, and you have investors going across the spectrum. But tell us a little bit about that, and how do you actually participate in this platform? Do you have to be part of these IPOs that you do with specific developments, or there is a separate liquidity question I have later on?
So, I suppose the biggest difference with what we provide is that people get to choose to invest in a specific opportunity versus another. So for argument's sake, we've just had a very successful raise down in Cape Town with a property called the Carrington. There were 49 units that the developer is busy repurposing in the Cape Town CBD. Those 42, we bought 7 units. We secured 7 units for our investor community. The other 42 were sold out in 7 minutes. And so generally, those 42 transactions would have been to family offices, already well-heeled investors. And the fact that we were able to secure those 7 and offer it into our community, I think we had about 5,400 and odd people invest in those 7 units. So that's a good indication of the access that is being provided. The age range as well literally goes from like 1 year old to 80. Again, affordability. I'm always amazed at the positive nature of the 80-year-old property investors, but also a lot of parents investing on behalf of their children. And as you say, with no minimums. So on that particular investment, our average investment size was 1,200 Rand. And in this scenario, if you've got 1,200 Rand, you've got absolutely zero chance of investing in specific residential property in the Cape Town CBD. As you say, I think having done the stats, we had over 2,000 people that invested in this particular IPO with less than 100 Rand. So there's 2,500 people that, again, own quality residential stock in the Cape Town CBD that would have never had the opportunity to. And as you rightly pointed out, we had people that invested a number of hundreds of thousands of rands. I think for them what was interesting is, theoretically you could have gone and bought one directly, but then again it comes down to diversity and diversification. Putting 200,000 Rand into 7 units gives you that diversification in that specific instance versus owning one of your own and having the risk of a tenant not paying or vacancies or any of that. So there's diversification opportunities too.
And since the 2 years that EasyProperties or just over 2 years, how has the take-up been? I know you've got some ambitious targets, but talk about your investor community. You're involved with quite a few developments.
So Charles Savage, who's the CEO of Purple and Easy Equities, likes to say that EasyProperties is the most spoiled startup in South Africa, and he's not wrong. Being able to launch a business into a community, at the time we launched, I think there were 750,000 within the Easy community. So we're very spoilt from that point of view. It was very well tended soil. But the take-up's been good. We've had over 250,000 people register for the EasyProperties platform. We've got well over 70,000 active investors. So I'd say the take-up's going well. As a collective community, we've invested in close on 260 units, numbering over 300 million rand. The targets are ambitious. We're looking to at least double that, holdings in the coming year.
Okay, and then going back to the demographics, it's quite a wide spectrum, and then I was going to ask you about the 1-year-old, but obviously it's the parents investing on the behalf, but it's good to start young. The demographics are, is it mainly younger people? Is it a cross-section? You talked about an 80-year-old?
Yeah, so it is a cross-section. I mean, both from an age point of view and a geographic point of view. Interestingly, the majority of our investors are in their 20s. And I think that probably points to some of the changing attitudes as it comes to property ownership. People want to invest in property, but I think a lot of these younger generation don't necessarily want to stay in a property that they are specifically tied to, with a mortgage or whatever the case might be. So this is a good opportunity for those people to get onto the property ladder, to get a share of what is now a residential opportunity. We've got other opportunities coming as well across different sectors. So 60% of the investors in their 20s.
Okay.
What has always been quite interesting to me is 68% of all of the people who invest in our properties are male. And it's always been quite jarring for me why theoretically, when one looks at it superficially, the female investors were lagging behind. But I actually take quite a lot of comfort from the point of view that I know with Lightstone, when they release their figures each year, that the highest or the biggest group of individual buyers are single females. And so I always kind of joke whenever I come across with male investors that the females don't need our help to get started. But it's spread across that demographic as well.
It might be a generalization, but we often hear women are better with money. So, but I also suppose the Lightstone remark that you made might be the direct investment of investing in a home to stay, for example, and starting off early. What is Equities also looking to try to get more, or I would think they would, but initiatives to try to get more women to invest?
Yes, definitely. We recently had a couple of really good sessions with some female stockvels who've raised significant money and are looking to invest into the platform as well. So definitely, many more females needed.
Give us a little bit more detail on your partnerships and your associations, because it's a very, the disruption side of Easy Equities model, buying into properties and or developments. Maybe you want to highlight some of the other developments that EasyProperties is involved with. When I did the report, I saw some big names, Baldwin, a couple of their developments you've invested in.
Yeah.
But just this week you also got involved in the Saxon Square development in Rosebank was launched, and you also involved there. Maybe you want to talk about that.
Yeah, so I mean we are essentially developer agnostic. There's no specific partnership or arrangement. We're not a distribution arm of any particular developer, but we do have really good relationships with the developers. I mean, you mentioned Baldwin. Baldwin really love the EasyProperties model, and they've been very generous in giving significant discounts to our investors, and also very generous in giving up to 3-year rental guarantees on their units as well, which is great. Developers putting their money where their mouth is obviously great comfort. So we've got relationships with them. As you rightly pointed out, Saxon Square, which is run by Profica. It's also TriStar Construction are involved. So we've got good relationships with them. But there's no specific developer that we have a preferred relationship on. We assess every opportunity on its merits. And if we feel that it doesn't warrant going onto the platform or is not good enough for our investors, then it doesn't go on. We've also obviously got a very deep association with a development company called Narrative. They're also part of our property partners who help and go out and procure deals for us as well.
Just to give a little bit more insight, the management side, because it's quite interesting that you mentioned why maybe somebody should not necessarily take a little bit more risk and invest in a property and then have to let it out. A lot of people who have money would invest in a property and get an agent to deal with all that. But for somebody who might not have access to as much cash, that benefit around you're not investing in one, you're investing in 7 units, and maybe 5 of the 7 is occupied, so you're still getting some income.
Yeah, well, I think I heard one of the previous guests talk about COVID, and obviously that was an enormous disruption to the market. I mean, both with people losing jobs and not being able to pay rent and all of that. Also with vacancies and trying to fill vacancies. If you are all invested in one unit and your property is vacant or the tenant's not paying rent, then obviously you've got to find the extra money every single month to pay that bond. We were lucky in that by the time COVID hit, we launched with 4 different property collections. One of the collections was hit a bit harder by COVID because it was in the slightly more affordable market. But the guys who launched with us had invested in over 20 units. So while there were 1 or 2 that were a bit tricky to get rentals in, we were still at least collecting income on the other 18 units. So diversity is key. Again, guys who've invested in all of our different property collections, and there have been quite a few who've since started and have invested in all of them, they've now diversified across 260 individual units. So, 5 or 6 or 7 of those are vacant or, there's no rent collected or something like that. It's not really a big deal.
Going back to the IPOs, and we think IPOs with the, listing on the JSE or on the New York Stock Exchange, your IPO is slightly different. Can you give a little bit more insight on how exactly that works? Because you have people that might sign up and take advantage of each development as it comes up, but you also have another level from the prop tech side where liquidity, there is a level of liquidity of selling it through an auction, I believe.
Yeah. So maybe to deal with your first part of your question first, you're exactly right. So investors have the opportunity of investing in a specific IPO, and we've decided to put those property collections together in a homogeneous way. So there might be, which is sometimes different to investing in the funds, where you're investing in a fund and you've got fund managers who are buying and selling and making decisions, on those particular assets. This way around, you can decide you specifically want to invest in Cape Town, you don't want to invest in Sandton, whatever that story might be. You get the opportunity to apply for shares in that SPV that owns those units alone. So you're not obliged to obviously invest across all of them. Yeah, and the second part is obviously auctions. One of the major friction points with property is liquidity. Having just sold my house now myself, it took me close on 6 months to sell. I was looking at another opportunity, and by the time I had got my cash out, that opportunity had largely disappeared. So liquidity is a huge thing, though we do try and encourage our investor base to remember that property is a medium to long-term investment. It's not a meme stock, and it's certainly not crypto, and you're going to look for 30, 40, 50% returns or losses, in a short period. It's a 5 to 7 year investment horizon, and we encourage our investors not to invest with money that they're going to need for school fees or rent or whatever the case might be. But we also understand that things happen, and people do need access to their funds. And so we built up an auction capability where once a quarter people can put their shares onto our platform for sale. It's essentially a marketplace within our community. And people can buy and sell shares. It's not only for selling, of course. Guys who are later to the investment platform might very well want to invest in some of the other opportunities. So there's a good opportunity for them to buy at that stage too. So
I guess you have to be in the community to access those opportunities.
Yeah.
Okay. From a financial regulation side, property is sexy. People love investing in property, but you have a case where there's been a lot of property schemes over the years that have been ended badly.
Yeah.
People have had their fingers burned one way or the other. Very often these are private operations where it's you sign up as an investor and that sort of thing. Considering EasyProperty being part of the bigger Purple Group, talk to us about from a regulation and governance side.
Yeah. I've been in the property industry for 18 years, and when I made this transition into essentially the financial services business and the property side there, I've been amazed by the huge regulatory barriers to entry, but also the regulations that look after all of these investments. So yeah, we governed obviously by the Companies Act, by the CIPC, Financial Services Regulation Authority, the works. So before we even put a property onto our platform, and after it's been approved by the investment committee, we've got to submit what is essentially a 70-page document to the CIPC, and they scrutinize that and check for all sorts of things, and so it's highly regulated. By the time this property comes onto the platform, there's been months of work in the background to tick the various check boxes and everything that's required from that point of view. With regards to some of these other private enterprises that have gone before us, this is very different. Each of the SPVs is on the title deed of the specific property, and each of the shareholders on the shareholder register of those SPVs. So, it's regulated in all manner and form.
Okay, and talk to us about the returns and the yield side of things. We talked about the liquidity aspect if you invested and you have these auctions, and you did mention that you encourage your investors to stay in it, but the benefit is similar to investing on the JSE, for example, in a property stock, where you benefit both from dividends as well as capital gain.
Yeah. And that's one of the benefits, again, of our collective crowd-funded checkbook, is that we are able to, with these multi-unit purchases, negotiate significant discounts. One of the recent listings on our platform, we had negotiated a 23% discount, which gives you a real running head start on your capital growth. Yields obviously vary across different provinces. I think the biggest thing is obviously the benefit of investing in property is both getting a rental yield and your capital growth. And all of our properties offer a different mix of that, depending on what a particular investor is looking for. There are high-yielding properties with a slightly lower capital growth, or vice versa. It very much depends. Again, in some of the Cape Town property markets, the yields can be slightly lower because of the expense of the property, but your potential upside for capital growth is big. The areas is still pumping.
And the question I asked the previous panel, everybody's talking about it, maybe not so much inflation, but the impact of inflation. How is the interest rate cycle going to affect your investors and Easy Equities as a group? Is it positive? Is there a balance?
Yeah, well, I think from an EasyProperties point of view, we decided to be quite conservative with our loan to value. So the debt that we take on each of these properties, you know, in some of the property investments, guys take a massive loan to value, just really trying to boost the yields that they're getting. We decided to be conservative, and thankfully, and that was, when we launched, obviously interest rates were at an all-time low. But I suppose it's a case of, wanting to under-promise and over-deliver. And so we only take a 30% loan to value on these units. So certainly the kind of rental income that's coming in more than covers all of those bonds, obviously at that low loan to value rate. But yeah, the simple fact of the matter is in a rising interest rate environment, your cost of debt increases, and it erodes some of the returns. Unfortunately, there's no way to escape that. Thankfully, because we've got this long-standing relationship with our mortgage providers, we get good loan rates. Obviously the inflationary aspect is a concern. It would be naive to not think that.
Okay. We talked about the development, some of the development partners and that side of your model. Where are you seeing opportunities? Let's stick to residential for now, but from a South African perspective, I see that you are invested across the country, but where are you mainly investing in, and where do you see opportunities for expansion? It's pretty much the big cities for now.
For now, yeah. We've invested in KZN, the Western Cape, in Cape Town itself, deeply here in Gauteng, in Rosebank, some parts of Sandton, and out in Pretoria. Yeah, I mean, you mentioned the Saxon Square opportunity that we've just launched. Rosebank is an area that is doing incredibly well. That sectional title market has increased 12% per annum over the last 9 years. The amount of development that's going on in that area is extraordinary. I know that 60% of the major construction that's happening in the country is happening in Joburg, and the vast majority of that is in Rosebank. Rosebank is outperforming Sandton from that point of view. And so, that's obviously a really exciting market for us. The other markets are interesting. One of the reasons why we went down to KZN is to take advantage of this Zoom boom. When people suddenly realized that they could work from anywhere and chose to rather be at the coast if that's what they wanted to. So we were lucky enough to invest in a whole bunch of units there to take advantage of that. But I think the next wave, Cape Town's obviously doing incredibly well still, but I think the next wave of opportunity is going to be in some of these slightly smaller Western Cape markets. Cape Town is very expensive, especially when people are selling in Gauteng looking to move and enjoy the lifestyle that the Cape offers. They often get like a rude awakening with what you can get like for like with your rands. And so there are a lot of more people pushing out into some of the slightly farther out areas. If I think of Hermanus and Somerset West and things like that. So geographically looking at those areas. And then also obviously just across the different property types. I heard your previous guests talk around student accommodation. We are assessing a whole lot of opportunities. It's actually been something that has been requested by our community. Stellenbosch is particularly expensive from a student accommodation investment point of view. So we're looking at some of the other major areas. But yeah, some good opportunities there. And again, the micro storage, those kind of self-storage units, micro industrial units, that kind of stuff. Lots of different opportunities around.
Okay. Tabu sends a question in and asks, why should I invest through EasyProperties as opposed to investing in REITs on the JSE. How would you respond to that?
Yeah, so they're such different products. When you invest in a property REIT, you obviously you're putting your cash into a massive property holdings. You don't have any say on what assets are bought or sold or anything like that, and you are reliant on those decisions that are made by the fund managers. So there's obviously also then just differences in terms of the dividends and the profits that are paid out. EasyProperties pays out 100% of all of the proceeds of these investments. But again, it comes down to personal choice. There are a lot of really good REIT stocks on the market where people can invest. The difference with us is that you are specifically choosing what assets you would like to invest in, for one. Often these other funds that are listed on the JSE, you're actually investing in the stocks rather than the underlying assets in a way. It's a stock play. This one, EasyProperties, you're investing directly into the properties and decide how and where you want to invest in those things.
Rupert, we'll have to leave it there. Thank you so much for your time. We'll have to also look out for EasyProperties and some of the new developments going forward.
Thank you very much.
Thanks again for joining us. That's the end of this property session.